Hello everyone and welcome to Elliott Wave Cafe. It is Saturday morning, we are on the July 30th and let's jump and get going on Bitcoin Elliott Wave analysis. I'm your host, the Cowboy. This is Elliott Wave Cafe, let's get started. Alright, so it's been about a month since last time we spoke up here for YouTube, and since then, a lot of things have happened. I think, Bitcoin has been trying to curve out a bottom along with the rest of the risk assets, and hopefully the second half of the year will be much better than the first half. So I want to take you through the charts. This is a very simple and clean look at the 1 week time frame for Bitcoin, and in here, you can notice that we remain in a pretty decent uptrend. I have this labeled as a wave 1 cycle, followed by a wave 2 over in March 2020. And since then, we've had a pretty strong impulse in here that we are marking as a primary wave 1. And the corrections since the beginning of the year, since actually late last year, since now, we're looking at this as a double zigzag for a wave 2. This has traveled all the way back down. About 78.6% of this has traveled in this primary wave 1. You can notice that, this longer term trend line, it's holding one more time, at least on its first attempt right in here, and we're trying to recover from these lows. So things are looking, definitely interesting. We have a rally in the risk assets. We can notice the S&P 500, the Russell, the Nasdaq. Things are starting to improve a little bit. We have a lot of breadth indication up there. And I think crypto as an asset class is going to benefit. And here we have, Federal Reserve that is trying to continue to raise interest rates in the face of very high inflation. And at their latest meeting, which happened a little bit earlier this week, they kind of guided a little bit slower than maybe what the market was necessarily expecting. But I think we're kind of in line in here, thinking that they're probably going to increase rates with another 50 basis points maybe in September, then another 25, and then they're probably going to slow down. So remember, we're facing, a possible recession in the United States. The data came in pretty weak. And the markets are trying to front run, this approach and try to establish themselves ahead of time for a possible rate cut from the Fed, or if not, a slowdown in their hiking. So the inflation remains a problem here. I don't want to talk about the macro today. This is entirely supposed to be about Bitcoin, but I just want to give you a little bit of a time frame on how some of these risk assets are starting to react from some deep sell-offs that have been happening since the beginning of the year. So Bitcoin and the rest of the crypto class, it's trying to curve out a bottom in here, and we're starting to see signs of a possible recovery. So looking at the 1 week chart, if a wave 2 was found here at below 18,000, that means that this wave 3 should be in a very initial stages. So what we're looking for a pretty good impulse move off these lows. And a very important level that needs to be overtaken to start to get more confident about further upside is this level up here at about 48,208. Once we climb back above these levels, I think the market will get unleashed and will start to accelerate much, much higher. So I just wanted you to keep in mind the longer term perspective, where we are in the cycle, kind of how the price looks, what are some of the corrections in here. And if you actually measure the size of this decline right here, from the top of this X wave to the Y wave low, and you copy a line that connects these 2 points, with the line that starts at the wave 1, you will see that these are very, very similar corrections in time and in price and in magnitude. So it's an interesting thing how the markets, tend to be, similar in their formations at times. or more often than we think. So I'm continuing to watch signs to see if we're starting to get a larger recovery from these lows. So I want to also take you to my candlestick chart. So I'm usually watching three types of charts. I watch longer term high-low close or open high-low close charts, when I notice the patterns and when I notice, the swings, the important levels. Then I watch candlestick charts, that are telling me a little bit of a deeper story, where I try to put, levels, and I'm watching the wicks, I'm watching trend lines, things of that nature. And then I also watch moving averages, where I'm trying to see where the momentum of the market is. So I don't have a lot of, a lot of charts, a lot of indicators. I try to keep things very, very simple in my analysis and try to read the tape and read the price, combining, using Elliott Wave as the primary method, but it's not the only one. So taking a look at the candlestick charts in here, you can see how you can see some of these demand and some of these supply zones and things where prices tend to react. So this is that longer term trend line that you've seen in the previous slide. And notice this big black candle in here. This black candle was the capitulation move that I think finished off at about June 18th, I think, was the low that it was in the Bitcoin. I wrote an article on June 12th about it, which I'll show you a couple of slides here a little bit later. And about 6 days later, we have found a low in the market. And this was, just a big flush down of sentiment, of leverage, of some of these crypto companies that's starting to show signs of, having to restructure and bankruptcies and stuff like that. And since then, we weren't able to make new lows. We weren't able to do so. This big, demand zone in here, held very, very well. The price went sideways for, a few more weeks in here. You can see there was about a 4-week period of very just choppy and sideways movement. And then finally we were able to break out of that zone and start to show signs that we're about to climb higher and test back towards $30,000 zone, and that's how it looks. So when you see a candle like this that doesn't have a continuation, and then you see that the bulls are starting to take charge, it's very likely that this was the end of the move, something that happened back in March as well. So these very strong candles in here, this one was a similar story. They tend to go sideways and there's no continuation, then the upside is going to start to be to have better chances, right? So I'm watching this channel as well because it's very important. So for me, we have to get back above the middle of this channel, get back above this resistance zone, which I'm not expecting it to give up very easily. So there's probably going to be a lot of fights that are going to happen in here, right? A lot of people that bought Bitcoin, let's say, on approach to it, and either they were surprised by the move or they didn't have a chance to get out or whatever happened. They might want to get out at break even at those levels, so they're going to close their positions. Then whoever bought, let's say, back here at the lows, it's going to see this level as a perfect liquidity level to sell their position. So there's going to be a lot of fight happening up here between, let's say, 28 and 32,000 in Bitcoin. So I don't expect this to be a very, very easy level. But if we're able to get back above it and then try to establish ourselves above that level, then the next comes this trend line that connects the 68, 69K high with the 48K move in there. And then if we can get back above that, then I think the market will get unleashed for a much larger move to the upside. So this is just on a weekly time frames. I'm watching this on the monthly, I'm watching it on the quarterly, I'm watching it every day with the members on the daily as well, how we close, how things are. And for right now, this is speaking to me that this move should continue to push to the upside. Now, the next one that I have here is, like I've said, is the moving averages, because I think, they kind of show where the market momentum is. And one of the most important averages that I watch is the 50-day moving average. And, the 200-day, it's obviously a much longer time frame. And you really want the prices to be above the 200 to have confidence in price and it further moves to the upside. Every time you're below that, you're looking at the market that's kind of negative and not, let's say, very exciting. Not only we've spent a long time below the 200-day moving average, but we've spent quite a bit of time below the 50-day, right? So if you look in here, maybe at the end of April, we broke, seriously below it, and then we had the crossover between the 20 and the 50, and we haven't looked back since. So this is the first time, in a couple of months here, in about 3 months here, that we're climbing back and we're trying to regain momentum to the upside by climbing back above the 20, climbing back above the 50, and creating a crossover between the 20 and the 50-day. Now, the 50-day continues to point lower. This is not a very positive sign yet, but this is kind of how things start. You need the prices to continue to climb higher or consolidate and give this average a chance to reverse. This is not going to happen overnight. And if you see in here, you have a pretty heavy zone of resistance that it's going to, start to kind of come into play the moment the prices will get back above 26 to 27,000. And I think that's where we're probably going to go before we start to encounter resistance and then come back from there and try to retest that 50-day moving average. And in the meantime, this will give a chance for this thing to kind of reverse higher, and then it's going to provide support on the way down. So this will become a level to trade against once the prices are moving higher. Let's say, people that are following, that are trend followers, are going to use this as a barrier, for support on the downside, and they'll continue to add to their positions or initiate new positions on returns to those levels. So it's very important that we continue to hold here, and this is right now at about 21,000, let's say 600. If we drop below these levels, there is a high risk that we will continue lowering the price of Bitcoin. So it's encouraging what's happening right now. I also wanted to show you, and I talked about this with the members, because this formation in here, the moment that I've noticed the way it is, I had a high degree of confidence in it. I wanted for this move to continue higher a little bit earlier, but the market continued to trend sideways for a while. So it still remains a very important reversal formation in terms of candlestick patterns, right? It didn't have, let's say, a quick reaction higher in a more of a V-shaped type recovery, but that does not diminish its importance. So then you can notice another formation in here in a bullish engulfing, and then you notice another formation right here. This is another bullish reversal. So prices are continuing to trend higher. This is encouraging, and we are long. I'm going to show you a couple of things that we've done with the members, but basically, we've initiated positions at about 18,000 on the cash market, back onto this drop just based on formations that are, and sentiment that was happening here. And then we have another strategy where we were looking in terms of where we are from a fear engage index, and use that as a as a way to kind of enter the market and look for, higher returns looking forward 1 year to 2 year time frame. So I'll talk about that a little bit more. So let's jump over to the next one. I'm going to take you to some smaller time frames in here. So this is the daily, and that's the wave 1 primary in there, right? And then you can see the intermediate WXY. So this is a double zigzag where you look, at the minor degree here in a wave A, up in B, and then down in C. This completes the first, the first ABC, the first zigzag of the whole pattern. And that's why we're labeling it as a wave W. Then you move higher towards 48,189, and this creates a wave X. Then you move lower again, another in a big impulse in a wave A minor, then up in B towards 32,400, and then you sell off in a 1, 2, 3, 4, and 5 for a wave C of Y of a larger 2. Now I want to take a minute and talk about this, because here's what's happening. This wave 2 could have very well finished up here. And there is really no way of knowing if that is the case until you're actually starting to break, some of the formation that has been in process since this lowest form. And that formation is this formation right here. This move right here once you broke above this trend line, could have continued to push much higher and started the next advance. And this is the risk that you have in the market. Sometimes prices and corrections move from a simple correction, which would have been just a simple ABC zigzag with the wave too low, and then a move higher in a larger third, or you can have a combination where you get a connector wave, like in this case was an X wave right there, and then you move lower again, and you begin the second half of the correction. So this is, and you know, I'm not going to spend a lot of time talking about corrections. There's plenty of videos on my channel about, you know, a complex correction and triples and all that, but this is a pretty good example of kind of what happens when one correction, a simple correction, is not enough to, let's say, correct the entirety of a very strong move with a very large percentage gains, right? It was very, very small to be the entirety of a second wave, although, I mean, you know, there were counts where we were looking for it to be maybe a fourth wave or a triangle, right? But the market decided that this is just going to be a connector wave and the move is not done. So this is just another clean example of that. So you have a WXY, and here is the kicker, right? As we know in Elliott Wave, you can get a complex, and you can get, you know, it's not the right word, but you can go double complex, or you know, but so you can have a WXY, so you can have a triple move, right? So you have a WXY, and then you have another X in here, and then you have another Z. So that will make that whole decline as a triple, a zigzag, or a triple three. It's going to be a zigzag if, and I'm just talking hypothetically here, right? If you're going to get an X wave and then you're going to get another zigzag lower, that's going to be a triple zigzag. If you're going to get an X and you're going to get, let's say, a flat formation or maybe a triangle, then it's going to become a triple three. That's how they're called. So for me, it's very important that these highs here get taken out to eliminate the idea that this could be, let's say, another X wave, another connector wave, another failed rally with the continuation lower. So the first level that I would be watching would be this 32,400, and then higher than that about 48. Now there is no way of knowing, and you know, we will continue to watch for signs and monitor this every single day with the members and every single week, and look for signs, you know, of let's say failure or further confidence in the moves to the upside. But that does not mean that the market will not give you trading opportunities, right? So this was a trading opportunity to the long side. You know, there were a couple of other scenarios in here, and you know, there's also opportunities to the short side if the market falls apart. So I wanted to kind of spend a little bit of time here. Now take a look what happened from this low, and you know, we're looking to see if we can establish the wave one right there. And this basically is, I don't have the label, the prior label. I don't know why I didn't catch that, but this is a 1-2 at a larger degree. So you have a wave one of these lows, then you have a flat in here and an ABC for a wave two, then you begin another 1-2 sequence, and we're looking for this to push higher above the trend line. And this is important because if we're taking above, if we're climbing above the trend line, right, that's going to tell us that, you know, a larger third wave is in progress, and it's going to give us confidence in the fact that a wave one from these lows will get established. If we're starting to fall apart at this trend line and coming back below the swing low right here, below this wave two low, that means that this is going to be a corrective move, and we're probably going to look for further downside in Bitcoin. So we want a series of higher highs and higher lows to continue to get established and continue to create a trending pattern upwards, and that's how you stay you know, with the trend. If you're patient, then the markets will reward you, but you got to watch these swing levels, you know, for confirmation that that continues to be the case. So here is the next slide in here, and actually I have it posted in here. So you have a 1-2, and then you have another 1-2 out of there, and then you can see, so this is a 6-hour chart, and then you can see in here that you have a very small 1, 2, 3, 4, and 5. Maybe there is still a third wave in progress in here, and now I'm expecting a little bit of a pullback, so we can get it into Monday or Tuesday or something, and then we want to see if we can climb back above this trend line that I was showing you before, and also above the top of this uptrending channel. That's the very important channel that we're watching. We want this to continue to remain as is. Not only that, but I would like to see prices break above it, with confidence and with a lot of volume, and to kind of get back above this. You can see where this line kind of meets the downtrend line. That's where we're going to have a little bit of resistance. So you combine this with, let me go to the next slide. You combine this with the resistance that's back up here into these levels, right? And that's probably going to be a zone of, let me see if I can draw that. That's going to be a zone of where, Bitcoin is going to have some issues right there, right between that trend line and right into that box right there. Right? This is very important. So this starts at about, 25K, 26K, and it moves all the way up there to about 27. So there's going to be like about a $2,000 range where there's probably going to be a lot of offers. And, the bulls are going to have to fight those and see if they can get through that. So this is what's going on here at the smaller time frame. Now, I was talking to my members in here, and we actually had a post that this is an ideal entry for Bitcoin, because this looked very, very corrective. It came back and tested the bottom of this channel. Not only that, but you had a 618 pullback right here at about 20,774. So in terms of trading structures, if you believe that this count is correct and the market gives you these opportunities, these are perfect entry points. And one of the things that I teach in my course, which I'll talk about here in a second, is that this is one of the ways to kind of start to get involved. You wait for this market to push a little bit higher above some of the swing highs, break above the channel, and then a long position can start to be initiated in a look for a higher third wave advance. So this is one of the strategies that we use to get into some of these trades. I wanted to show you a little bit what's going on here with the dollar, and this is a chart I've showed about a month ago as well in the previous presentation, and I was talking about how important it is that the dollar starts to lose momentum and starts to reverse from such a strong uptrend in here, because this is what's needed to relax the risk assets and to reduce some of that fear that was in the markets. Dollar is obviously it's a very important macro indicator in here that tells us when to be cautious and when to be more excited about different markets. And in such a strong uptrend, it's very hard to stay or to believe that the risk assets will recover. So since these highs in here, you could see that we have started to drop a little bit. You can see that in the euro dollar price. Actually, we're starting to look for longs in the pro room about it. And, I'm starting to get even more bearish on the dollar based on some of the rejections that I see on weekly and monthly time frames in there. Things are starting to look interesting. So if the dollar continues to push lower, like it's done in previous instances, I think that Bitcoin and not only will benefit and will start to offer additional support for risk, and it should move higher. So you can see how Bitcoin reacts as the dollar comes lower. So it's very important to continue to kind of keep an eye on this and use it on your dashboard as an indicator, for that. And since we're at the middle of the video, guys, I want to talk very, very quickly about what we're doing here in Elliott Wave Cafe. So you can see back in here, if you go and type in your browser, t.me/Elliott Cafe, _bot, it will going to take you to the Telegram, and you will press menu in there, and then you will see, what options you have for the trading room that I have. So right now, I'm not offering any more monthly subscriptions. It's only yearly. And because I want only, if you're serious about learning Elliott Wave and macro and Forex and currencies and bonds and alts and things like that, you can come in there and you will learn everything there is to learn about markets in general, not only Elliott Wave, but how to trade them, how to analyze them, how to look at them. So there's a 25% off of the yearly subscription until August 1st at midnight. After that, I'm going to take that off, and it's just going to be the regular subscription. So go ahead and check this out and see what you think, and come and visit us. And there's also an Elliott Wave course that I wanted to talk to you about, right? There's an Elliott Wave course of about 7 hours. So if you're not very familiar with the Elliott Wave and how it works, and what the strategies are, and to just get deep into it, it's included in the yearly subscription, right? So it's not a bad deal at all if you wanted to come and just take the course, right, and just study. It might take you a month to study it and learn it, and then in the meantime you watch my videos, my daily presentations, my charts, and then you'll become very good at not only analyzing through Elliott Wave, but also looking at the markets through the macro perspective. So just a quick pause on there, and we'll continue to go in here. So don't forget, 25% off until August 1st at midnight. So let's continue to go. Now, here is some of the correlations that we have between Bitcoin and the rest of the risk assets. You can see, this is Bitcoin. This is the S&P 500 in red. And it's been a very tight correlation, even tighter with the NASDAQ, which I'll show you on the next slide. But you can see that the S&P 500 is starting to reverse from these lows. Not 100% sure, and nobody really knows if this is the low, right? But I think that it's important that the market are starting to react out here, and we've climbed above the 50-day moving average. There's a lot of breadth that's coming underneath the market. Some of the earnings, even if they're still kind of poor and not showing a lot of good data, I think the market is starting to look past that, starting to look at the recovery, starting to look at the fact that we're going to pass this high inflationary period, and stocks and bonds can become attractive once again, especially if the Fed, it's going to slow down their rate increases. Now, there's another camp that says that this is going to continue, and the Fed will continue to be aggressive, which is fine. But so far, we're watching the price, and the S&P 500 has been recovering quite well. And if you look at the structure of this red decline in here, you can see that it's very similar to kind of what happened in Bitcoin. It's got a little bit of a different shape, but you can see an ABC in red, then an X, and then you can see another ABC. So this is again another double zigzag correction in the S&P 500. In Bitcoin, it's a little bit more, finesse, a little bit more, you don't see it as clearly, but it's there, right? You have an ABC, X, ABC, with a recovery that has already started. So I think that this will continue to go and try to catch up with the S&P 500. And it's even clearer if you look at the NASDAQ. The correlations is much tighter, right, with the technology sector especially. And you can see in here again, ABC, X, ABC in, I'm sorry, that's Bitcoin in blue, but you can see it in the NASDAQ in red here. ABC, X, ABC, and we're beginning a recovery. And actually in the NASDAQ, we have taken this prior swing high, which is a very important, I think, indicator. So if we're able to sustain and continue to push higher, then we're probably going to come back a little bit, create maybe an inverted head and shoulder, and then further recovery can continue in both these assets. Another thing I wanted to show you is the crypto fear and greed index, because this is, we've talked about this on my last video, which was, I think, in July 2nd, I think it was. And, we were looking at the June 19th low. There was 6 in the fear and greed index. So the market literally bottomed, I think, a day before that, right? In about June 18th, I think it was. And, I've wrote an article, before that, and I'll get to it here in a second, but, here's where we are right now. So I wanted to kind of compare it, right? So this was the low when it was 6, and right now we're at about 40 or 43 in the crypto fear and greed index. Now this period in here has been, one of the longest maybe in Bitcoin history, where we stayed so depressed for such a long time in the price and in the fear gauge. In here, but the lows were established here at about June 19th. So this was when we had that extreme capitulation in the market, and everybody thought that Bitcoin is probably going to zero, or is going to create an avalanche of sell-offs and further bankruptcies, and it's just going to create this kind of massive crash. But Bitcoin held, and it continued to recover, and here we are again at about 43. Now, why this is important? It's important because we looked at one of the strategies in here, and I wrote in my, in my newsletter, right, the pigeon and the statue that I have, which I haven't been writing here lately. I was super busy, but I gotta get some articles in there. And it was called on June 12th, the end of the crypto winter. So, go ahead and, look at that. There's a link below the video. You can kind of read the whole thing. But basically, he was showing, how much depression there was in that market. And 6 days later, we basically bottomed. And it was, one of the things that I've asked on Twitter, and there's a couple of charts that you can see below as well. And I talk about, this negative sentiment. And with that, I kind of showed a study that was referring to the fear and greed index and its 5-day moving average, and this is in green right here. And every time the price and the fear and this 5-day moving average was dropping below 15, I was looking backwards, and every time that happened, what returns Bitcoin had looking forward, right, from 1 year to 2 years to maybe even 3 years. So you can see in here that looking 1 year ahead, the median return was about 153%, with an average return of about 128%. And there were seven trades that could have been taken based on this study, and then 5 of them was positive, 2 of them were negative. And it created a pretty good return. So based on this, we have taken, I think, 2 or 3 positions in the futures market on Bitcoin, and we're still holding those positions. And they're at an average at about 19 to 20,000. And, we're waiting, and I'm still running this experiment, and I'm kind of waiting to see what the returns will be, looking down, 1 year down the line, 6 months, and I'll continue to kind of look at that data. But go ahead and study this a little bit in here. It's an interesting, piece of research that I'll continue to do and present to my members. And I have different ideas about, how to work with some of this data and kind of show you some other cool things on there. So, we continue to stay long, and I think the market is it's recovering. Things are looking pretty decent. I will have another video for Bitcoin in about a month. I'm going to resume the videos in here with more macro analysis next week for the channel. But as always, I appreciate you being here. I think you guys are awesome. The channel continues to grow, and I really like your comments and your feedback, and subscribe and like, and let me know what you think. Come and visit me in the Telegram. Take advantage of this offer for the Pro Room. For the videos, there is a chat room in there that we can talk and discuss different accounts and what bothers you and what you like and things like that. So anyway, thank you for watching, guys, and this is the Elliott Wave Cafe. I'm your host, the Cowboy. See you next time. Bye-bye.